In this presentation, we will record a transaction related to donated office space to our not-for-profit organization. In other words, there's a donation of the facilities that we can use, office space that is going to be provided to our not-for-profit organization. We will record this transaction within QuickBooks Desktop, QuickBooks Pro. Here we are in our QuickBooks file. We currently have the Open Windows open. You can open the Open Windows by going to the View drop-down up top and the Open Windows list. Now we're going to open up the Trustee Trial Balance. To do so, we're going to go to the Reports up top. We're going to go to the Accounting and Taxes, and there's our Trustee Trial Balance. We're going to select that item, and then we're going to change the dates up top from 01/01/20 to 12/31/20, January through December 2020. Going to change the size of the font by going to the Customize Reports up top, Fonts and Numbers, Font, change font, 11, OK, and then yes, and then OK. So there's our trial balance. Let's go over to our Excel sheet to get an idea of what we will be doing here. We're on number 4. We're going to say that the building rent was provided. The value per year is going to be the $19,100. We're going to say per month, or we're going to record it all in this time period here. So we're going to record it, that transaction here. That means that someone has donated the rent on the building. So in other words, they've given us facilities that we can then use, and that's a form of donation. They didn't give us cash, but they give us a form of donation. They give us something of value. So what we need to do then, if that's the case, is we need to give them credit for the value that they have given to us. To do that, we want to credit the revenue that we have. We want to provide them with that information that they have provided us a donation in that form. And we need to record what we have received or used or consumed, in this case, the use of the building, in the format of an expense. So fairly straightforward transaction from a journal entry standpoint. We're going to say that we consumed the building. Therefore, we had rent expense. So that's going to be an expense going up. And the other side, rather than being cash going down, is going to be a form of contribution, and that's going to be income. So we're going to record the income side, the donation, and then the expense side. It's kind of like it would be the same kind of concept as if we got money and then paid it for the rent. We'd have the same kind of end result, the expense and the revenue on the profit and loss statement. So we're going to say it's not restricted. It's going to be a contribution without donor restrictions. So I'm going to put it up here. Now you might say, well, how can it not be restricted? It's a building. You can only do certain things with it. Obviously, it's restricted by form, but it's not restricted by the donor telling us we can only use it for certain type of things. Therefore, even though it's restricted in form, it's not restricted by nature of the donor restricting it by telling us to use it only for some kind of purpose. That's going to be the transaction. So we want to do that same thing in QuickBooks, but we also want to be able to provide the donor with the information that they have made a donation. And so we want to apply that out. To do that, then, we're typically going to want to use our forms in QuickBooks again. So I'm going to go back to QuickBooks, Home tab. So the question is, what type of form will we use if we want to give that information to the donor? We typically need to record a Create Sales Receipt. Now, the problem is, if we use a Create Sales Receipt, then it's going to be debiting undeposited funds and then going into the checking account, which we didn't get any money for. So what we would like to do is, how can we make something so that we get the sales receipt here so that we can have a list of the donation that happened and still be able to record the transaction of debiting the expense, not increasing cash. So to do that, what we're going to do is we're going to create a sales receipt. We're going to put it into undeposited funds. Then we're going to deposit it not into the checking account, but into another bank account we will set up, which is a clearing account, just simply to facilitate a transaction such as this. We'll take it out of the checking account, record it as the expense. So basically, we're going to record it in such a way as if two things happened here. One, someone gave us money, in essence, but we're gonna mark it off and note that they didn't give us money in the records. But it would be like someone gave us money, we put it in the bank, then paid that money out for rent. That's going to be the two steps we're thinking about as we put it into QuickBooks. Our objective in doing so, to provide the donor with that information, to provide the thank you letter, which is going to be our sales receipt transaction. So we're going to go in the sales receipt, and we're going to say this is going to be the donor. This person's name is donor for the office. That's their name, all right? That's kind of funny name, but that's going to be their name here. We're not going to add the full customer. We're just going to quickly add it. We're going to set it up in a class, and the class that we're going to set this up is unrestricted. So unrestricted, I'm going to put it into fundraising. Tab through this item, make this like, let's say the 12th that we're going to do this on. And then we need to set up an item. Now this is a form of contribution, so contribution unrestricted should be a good item to use, and that will increase that item is pointing to the unrestricted revenue. Then we're gonna go to the amount, which is gonna be that 19,100. Back over, we're gonna say the rate is gonna be 19,100. So there we have that. What's this going to do when we record it? It's going to be increasing undeposited funds. The other side go into our revenue account. Let's check it out. We're going to go save and close. Yes, please. Close that out. Back to the trial balance then. Within the trial balance, we have the undeposited funds. There they are. They have increased. The other side going to the contributions without restricted contributions unrestricted, as we see here with the 19.1. Now, closing this back, we don't want it in undeposited funds. We want it to be in rent expense. However, I'm going to go back to the home tab. I need to remove it from undeposited funds. So I'm going to deposit it not into a checking account, but create another account, which is going to be a bank account that I could just use as a clearing account. So to do that, let's go and make the account first. I'm going to go to the lists dropdown, chart of accounts, lists, chart of accounts. We're going to add a new account. We're going to go to the account, new account. We're going to set it up as a bank account. Then I'm going to say continue. It's going to be a bank account type. And this is going to be a bank clearing account. I'm just going to call it a clearing account. That means, to me, that means it should always be zero. It's only there to hold something for a very short amount of time. Then it will zero out. So it's more like it's kind of like a temporary account that's really temporary. It should be zero very quickly after the transaction. So I'm going to say save and close and no, and then I'm going to close this back out. Then when we make our deposit here, I'm going to make the deposit. I'm going to put it into, I'm going to check it off. That's the one we want. Okay. But it's not an actual deposit. This is just going into the clearing account, and that'll help us to keep clear on that. We're going to say, hey, that's going into the clearing account. And then we could say save and close. Now, what's this going to do? It's going to put it into our clearing account. It's going to decrease undeposited funds. Let's check it out. We're going to go then to the trial balance. We see that up top we have the clearing account for the checking. So the checking clearing up top is now increased. And I'm sorry I have this other account. We should say that that's going to be unused, but I won't do that now. And then the other side is going to be we went into the checking account and undeposited funds went down. Next, we want to take it out of this bank account and we want to put it into where it should go, which is going to be the actual rent expense. Now, the rent expense, we could basically write a check. In this format, I would do it in the check register because it's a little bit easier to see. To do that, I'm going to go up to the banking up top. We're going to go to use register. Banking, use register. We're going to choose the clearing account, the bank clearing account. Okay, there we have it. Now I need to zero this amount out. That's going to be a payment of 19,100. The other side is going to go to rent expense. Rent expense. That's what we want the other side to be. I'm going to say tab, set that up. It's going to be an expense type of account. Save and close, and okay. And so I'm going to say yes, close that out, and there we have it. So we have the bank clearing account goes back down to zero. Scrolling back down, we have the rent expense down below. If we take a look at the profit and loss by class, we can go up top and go to the reports. We can go to the company and financial, and then the profit and loss by class. Profit and loss by class, changing the dates up top from 01/01/20 to 12/31/20. And then we're going to have our classes up top. We put this into fundraising. Now, everything we're going to put into at this time, actually, we put it into unclassified. Now, notice this is kind of nice and quick. We could keep it in unclassified, and later on, we're going to be breaking it out in accordance with these ratios. So I'm not going to do it as we go. We're going to break that out at a later time, and that's going to be our breakout that we need to break out for the expense categorization. But now what I'd like to do is note, I'd like to start off with everything in fundraising. So it's nice to have this type of report that shows you what's in unclassified, because if anything is in unclassified, you could say, oh, there's a problem, something didn't get classified. So that's a nice column to have to keep kind of clean. Like you could put all the expenses there and then fix them in unclassified, but you might want to keep unclassified clean, and anytime it pops up, it's a reminder to you to say, oh, something didn't get recorded to a class and it should have been. And all you have to do is then find anything in this column and say, all right, I'm just going to double click on that item. It shouldn't be there. I need to assign a class to it. Double clicking on it, and I'm going to put a class to it now. And I'm going to assign everything on the expense side first off to fundraising. And then we're going to go back and break that out at a later time. So let's go ahead and say save and close. Yes. And yes. And then close this out. And then there we have it. Now that's closed back out, and it's going to be into the fundraising. So here we have it in fundraising. If we were to minimize this accounts, we have the unrestricted and restricted columns, our major two columns, and then the breakout, which really gives us that detail for the expenses. Again, if you widen the column, if that plus doesn't work, you widen the column, then it will usually work.